Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are joined by the CEO of Bitfarms, Mr. Ben Gagnon, to talk about Q2 earnings and provide an update on this organization. Now, obviously, a lot has been going on with Bitfarms in 2024. We're excited to get into the conversation, but before we do, please take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought about earnings, your outlook for Bitfarms in the back half of 2024, and your thoughts on this company's strategy moving forward. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we have Ben Gagnon back on the channel. He's been in the CEO role just over a month now. They came out with Q2 earnings. We've got a lot to go through in today's presentation, but first and foremost, Ben, thanks so much for being with us here today.
Thank you for having me, Bryce and Anthony. My pleasure to be back.
Great to see you.
We'd be remiss if we didn't ask. You had your first month as CEO. You also had your first month as a father. So we wanted to check in, see how that transition's going for you, Ben, specifically on the Bitfarms front, and really what you've seen in those first 30 plus days in the top spot there.
Yeah, happy to get into that. You know, my first month has been quite action-packed. Certainly, not short of things to do here at Bitfarms. We've got a lot going on the operational side. We've got a lot going on growth. And, of course, I'm going to be implementing, new strategies and new plans rolling forward. So there's plenty to be done. One of the things that I made sure to spend some time on this month was making sure I speak with basically every person in the company who's in a management position. And I've got a very clear vision for the company and where we're going. But what I wanted to do was I wanted to check in with, everybody who's at a key management position and understand from their perspective how they think things are going and how things can be improved, and specifically looking for areas of low-hanging fruit. And what I found was a lot of my theses were correct and were shared by a lot of people throughout the company, which is great because that means we're aligned in terms of what we need to do and how we can improve. The team is super energized. I mean, there's so much energy in the air right now. I think you could probably mine a block with it. It is palpable, the difference that 1 month makes. A couple of months ago, I think there was very much a different attitude in the air. But now everybody is re-energized. We're re-excited. Everybody is very much a believer in the Bitfarms vision and is so happy to be a part of this team working on building, what we think is going to be the Rearden metal of Bitcoin miners.
Yeah, amazing. I was going to ask what your first task was as CEO, and it sounds like communication with management is a great way to start. Now, for you personally, coming from the CMO or chief mining position, what have you noticed in terms of similarities? Are there any big differences between these roles, and how has that transition gone for you?
The transmission has been very, very smooth. I'm not somebody who's new to Bitfarms. I'm not somebody who's new to the C-suite. Really over my last 9 years as a Bitcoin miner, there's hardly a part of this industry or business that I haven't been involved in or seen or actively driven at some point in time over the last 9 years. I'm not somebody who transitioned in here from iBanking and has to learn everything on the go. I mean, I started 9 years ago building and racking miners and designing facilities and constructing things and building out teams and building out software. I mean, in 2015, when I started, I'm not a great programmer by any means, but in 2015, when I started, there were no Foremans or HiveOS or any sort of management software for your fleet. I had to program it all myself. I have a good understanding of basically every aspect of this business already and every aspect of this industry. The transition has been really, really smooth. Really, we've got a change in authority here. I've gotten a lot more flexibility. I've gotten a lot more resources. And so, I'm able to be a lot more effective at implementing change, at driving forward progress, and implementing the new strategies that we're looking at. So, I wouldn't say it's a massive change. On a day-to-day basis, I'm still working with every department. I'm still speaking with investors. A lot of my responsibilities are, carried over. I'm obviously less involved on the operations side of things on a daily basis, but for the most part, I now just have a lot more resources and a lot more ability to implement the things that we need to get done.
Yeah, it's exciting times. Great to hear that transition's been so smooth for you. Now, talk about big shoes to fill in terms of the CMO position. Have you guys made any decisions there? Are you going to be replacing that role? And if so, when will we hear more about that, Ben?
Yeah, that is a hard role to fill. The list of candidates is not exactly long, but we have had interviews with some good talent. I see you're raising your hand there, Anthony. We've had some good interviews with some great talent. I'm pretty optimistic that we're going to find somebody here and we're going to get somebody in the seat fairly soon. But we haven't finalized that. We haven't committed to it. But we are looking to fill that role, with a head of mining operations. The one caveat to that is that mining strategy is going to remain with me, and the mining person that we're bringing in here is purely going to be focused on operational side.
Gotcha. Makes sense. Yeah, definitely not a long list of candidates. And like I say, fairly large shoes to fill with you exiting that role, being one of the, if not the best mining officer in the world when you hung up that post, Ben. So moving
Might
along.
be the only one, Bryce. So I'm not so sure how much of a compliment that is, but I'll take it.
You're blazing trails over there. But enough about you now, Ben. We want to talk about Bitfarms. We want to talk about production here because you have earnings. They just came out. I'll set it up this way. You guys have been consistently one of the top performers in terms of utilizing your fleet, efficiency, amount of Bitcoin per exahash continuously in this space since Anthony and I both started. So maybe we'll kick off the earnings discussion there. How do you manage to stay so incredibly consistent in this cutthroat and competitive industry?
Well, we look at it from a portfolio management perspective, and part of the way that we do things differently is we spread our risk over such a great amount of sites, power providers, geographic locations, climates, all these different things that help to mitigate the impact of any single one event. There are challenges with that because, when you are operating 12 sites in 4 countries and 3 languages, there's probably something going wrong somewhere at some point in time. But it does mean that, all of those, whenever there is an issue, it's pretty manageable and it's pretty low scale when it compares to our total level of production or our total level of revenue, right? So we de-risk ourselves through having a very, very large portfolio of various different sites and all those different, aspects that I talked about. But when it comes to production, we've got an amazing team. Like I continue to repeat this and drive this home because it's true. We've got a fantastic group of people here at Bitfarms, and we are builders and operators. We are not a company where everybody came from iBanking and we're using third parties to do all of the management. We are operators. And, a lot of people in our company have really risen through the ranks due to their own proof of work. This is a company where we want to promote internally. We want to give people a chance to do better. And that drives a lot of initiative within the company. And that helps, I think, to deliver performance. When I ask the employees, what's the low-hanging fruit that you see? I'm starting to get tons of ideas about ways that we can improve and ways that we can optimize and ways that we can drive home cost-effective improvements. And so, operations is a constantly evolving process. It's not just about plugging in the miners. It's about how do you maintain the miners and how do you optimize and how do you continue to be better every single day. And, a lot of times changes don't happen overnight. But if we can be a little bit better every day or every week or every difficulty adjustment cycle, then over time, those changes really, really do add up. And we've been doing this now for 7 years, right? We started in 2017. We've made a lot of the mistakes in the past, and we've learned from them, and we've implemented changes, and we've grown, and we've become better. And that's a process that we will not stop. We are going to continue on that. And in many ways, we're looking to systematize how we review these processes and how we review our operations and determine how we can be better. So I'm actually looking to ramp up our constant revision of how we operate and how we optimize our operations across the company.
That's great to hear, Ben. I mean, the last 18 months, you've effectively been the top performer over that period. And year to date this year, you're still top, although I'm going to say the gap's closing quite quickly, because your nearest competitor, and I've got to say both you and Hive Digital over the last 4 years have effectively, been neck and neck in this sort of like operational metric. And we do stress to everybody, it's one metric. Don't start rushing out and thinking it's the only metric to look at. But if you want to work in this environment, you make sure you're operating, as well as you can be. That's got to be your first practical thing. But looking at the group there at the top now, the gap seems to be narrowing this year than it was in previous years. You and Hive seem to be run away with it in the last 3 years, but this year is like it's getting really close. 4 of the top 5 miners are Canadian. Is that no shock to you think, Ben, at the moment?
Canadian miners were really first on the scene. When you look back to the earlier days of mining took off in Canada way before it took off in the United States. It was big in Alberta, it was big in Quebec, it was big in BC, way before it was big in Texas. And so that doesn't really surprise me, Anthony. That means that, a lot of the Canadian miners have had that much longer to, learn how to operate, to improve, to get better. And there's fantastic talent in Canada. There's a bunch of incredibly smart people and talented people. And when you look at Canada specifically, it's an energy nation, right? This is a country that has largely driven its economic success through its development of energy resources. So to have that translate over to a great quality of Bitcoin miners is perfectly logical.
I mean, the fact that you're now located in 12 sites and you've got 200 development as well, how are you able to are you able to take lessons learned in your earlier sites and deliver the same type of production levels in these other sites, or are you finding that there are differences between locations for maybe environmental factors that play into this, or are there still areas that you can constantly improve operations from where you are now?
We can always improve. There's always room for improvement. But what I think is that when you look across our sites, we try to be as standardized as possible, right? There's no reason why we need to reinvent the wheel every single time we build out a Bitcoin mine. We're going to make some improvements. We're going to make some tweaks. We're going to make some modifications as we go along, as the equipment changes, as our knowledge improves about the different sites. But for 98% of our operations, it should be incredibly consistent. Certainly there are differences per site, especially in Canada. Canada is an area, especially where we took over, of our 8 facilities, we took over 7 former industrial facilities. And so when you're taking over a facility versus constructing a facility from scratch, that means we now have to work our infrastructure into the existing footprint of the building, which means that there can be a lot of site variations. For the most part, we're pretty good at understanding how those sites work, how we can get the most out of them, how we can squeeze the most miners and most megawatts in a certain footprint, something that I think we've done really, really well for a couple of years. But when you look at the sites that we're building in Paraguay, for instance, they're from scratch. And so they're modular and they're consistent, right? We're building In Paso Pe, we built 5 warehouses that are identical, and the warehouses that we're building in Iguazu are going to be identical to the 5 warehouses that we built in Paso Pe, and those were very similar to the warehouse that we built in Villarica, right? So there are some improvements over time, but especially as we get into more and more, fresh builds, our sites are going to be able to be even more standardized.
Yeah, that's a good point. I mean, looking at your operational hash rate and installed hash rate on your July update, 11.1 installed, operating at an average of about 10.3. I'm assuming that gap has got something to do with the T21s you've recently highlighted that are not operating where they should be, and you've indicated that those are going to be replaced by Bitmain at no cost. Can you give us sort of like an understanding of how much hash rate and when we expect the new miners to be delivered and installed?
Yeah, I mean, so it was about 3,000 miners worth about 700 petahash. So most of the gap between the 11.1 and the 12 was due to the underperformance of these miners. This isn't a problem that was specific to the T21s. It was a problem that was seen across all 21 series. There was probably some lower quality in the manufacturing or a change in the what's called a thermal paste, which resulted in a bad connectivity and a bad ability or an inefficient ability to transfer the heat away from the chip onto the heatsink and then through the air. And when you don't have an efficient heat transfer process, that means that the chip overheats really quickly, which brings down the entire performance of the miner as it tries to protect the chips on the board. And so that one simple component, which is actually a relatively simple fix in manufacturing, did result in a big drop in production for the miners that experienced that issue. We spoke about this at length with Bitmain. All the miners that we have coming out for August now have all been tested a lot more thoroughly. They've addressed this in the manufacturing. We don't expect this in any further batches for the T series or really across any of the other series as well. We think this was a one-off event. And, when you're dealing with an equipment provider who's introducing new models and new products so quickly, like this is bound to happen. Every single time that you buy a new miner generation, they're constantly changing the design and tweaking the components and as well. And so, you get these issues from time to time. What's important is what you can do about it. And, we worked with Bitmain to address those issues in manufacturing, which they have. And we worked with them to get those miners replaced, expeditiously. And so those 3,000 miners are being sent by Bitmain at their expense. They should be arrived and installed in about 3 weeks. So in the second half of August, we're going to get that hash rate up and running.
Excellent. No, and so from actually receiving the miners in, was it a case of you able to test them really quickly, or is it something that once you'd found there was an issue, it started occurring in other machines?
When we get miners, there's no initial testing; they go right on the rack, right? There's no testing before we put them on the rack. We put them on the rack, we start running them, and then after everything's installed, we'll circle back and we'll start optimizing and we'll start debugging what happened. And so, we were deploying so many miners over the last couple of months that, a lot of times we're throwing these miners up and we're sending guys over to the next site to throw in the next batch of several thousand miners. And it took us a little bit longer to go back and debug and diagnose than it would normally when we're just sending, 2,000 miners and we're installing them and debugging them. But the performance was noticed pretty quickly, but we didn't really have as fast of a response time in terms of diagnosing why the issue was occurring. So it did take us a couple of weeks to work through everything. They had to go through the repair labs and we had to test different solutions out. But quickly we found out, it was a thermal paste and that's a very easy thing to fix. But it's just a little bit labor intensive. So it's a lot faster to have Bitmain replace the units than for us to go through and repaste all of those miners ourselves.
Yeah, that's good to hear. Just right. So moving on to obviously the big part of the conversation is you released your earnings report yesterday for the second quarter of 2024.
Yep.
Can you sort of like just provide some of the highlights? And bear in mind, we anticipate there's going to be in terms of accounting, there's going to be a lot of net losses reported this period because of two factors. One is the halving occurs, so the rewards effectively reduced during April, and also the fact that not for you guys, but for nearly every other miner, the effect of the Bitcoin price dropping from Q1 to Q2 also results in an unrealized loss for these miners. So whereas Q1 looked really rosy for everybody, was seeing a sort of like a reverse of that in Q2. But there were some highlights for Bitfarms. Can you go through a few of those, please?
Yeah, and first maybe I'll just address the Bitcoin valuation question, because that's an easy one. You know, we're IFRS here in Canada, and so we can't use the FASB rules. And so the FASB accounting standards, which, you know, I think basically every miner has adopted in the United States, is what's driving the difference in accounting for saying, hey, the Bitcoin price was X at the end of last quarter and it's Y at this quarter. There's either a gain or loss, and that transfers down to the bottom of your balance sheet. We still HODL Bitcoin. So obviously, you know, there's a difference in value that's the same across all companies, but it's just accounted for differently in IFRS than it is in the United States under FASB. Like for our Q2 results, I think we had really, really strong growth. You know, we grew quite a lot. I think it was almost 70% over Q1 to hit our target we hit our ending hash rate of around 11 exahash, a little bit shy of our 12. That continues to improve. We're a little bit north of the 11.1 today as we continue to optimize and refine and deploy a little bit of our software changes, which are improving the performance of the miners. But we had $12 million in adjusted EBITDA. We had a 51%, you know, direct gross mining margin. We mined 614 Bitcoins. And I think, you know, when you look at two things here, when it comes to our quarterly results and our recent production, what you'll see is that since the halving occurred in April, every single month since then, we've mined more Bitcoin, right? So this is the result of our increasing growth, our increasing hash rate, our increasing market share. Is we're mining more Bitcoin month over month for several months now. As we continue to deploy more miners, we expect that trend to continue. It might not be perfectly linear because our growth is not perfectly linear throughout the remainder of the year. But, you know, we expect to end the year with significantly more Bitcoins mined per month, because the rate that we're growing the company, you know, over threefold this year is far more than the network is expected or is even, I think, capable of growing. Right, the network hash rate right now is maybe somewhere around 650. We're going to still almost double our hash rate this year. There's no way the network hash rate doubles this year, right? So at the end of the year, when we've delivered on our 21 exahash and 21 watts per terahash, we're going to be mining even more Bitcoins per month than we're currently mining. And, you know, we started adjusting that in terms of how we manage the Bitcoins that we sell every month. You know, obviously we've one of the big things that we mentioned here in Q2 is that our growth is fully funded. And that means that we're also selling less of our Bitcoins every month. And so at the end of July, we actually added, what was it? I think it was like 95 Bitcoin, and we broke the 1,000 Bitcoin HODL barrier. And that was a bit of an increase over previous months. And that's reflecting the fact that, you know, our growth is fully funded, our costs are improving because our efficiencies are improving, and our Bitcoins mined every month are also improving. So quite happy number, or quite strong numbers that I'm quite proud of. And, you know, we expect those numbers to continue to improve as we continue to execute.
Yeah, I mean, the balance sheet certainly looking stronger compared to the previous quarter. Another thing I noticed in terms of costs, and we've raised this with other miners who've released their results this period. We had a discussion with Jason about stock compensation. Your stock compensation for the first 6 months just about 4.7 million over the 6 month period, which you know, in comparison to some of the other miners that have released their numbers, is significantly lower. What talk us through the process that Bitfarms use when sort of like determining, you know, value to provide to their senior management team and staff, you know, sort of compensation and what, you know, what sort of targets have to be met to deliver that?
Sure. So there's a couple things going on there. I mean, one, you know, the point of having stock-based compensation is obviously to make sure that management and the employees are aligned with the interests of shareholders, right? If you have performance-based stock compensation that's driven by achieving certain levels of KPI, that means that when we're delivering value and the shareholders are receiving that value, the employees are also getting some sort of benefit for that, right? It's the importance of these programs is about aligning incentives with the long-term value creation for shareholders. I think, you know, it's hard to exactly say what's going on in all companies, but at our company, we have a special committee, which is made up of independent board directors, our head of HR, several members of senior management. And, you know, what we're trying to do is align with investors. We're trying to make sure that we're paying competitive rates so that we can attract and maintain, you know, the best quality talent in order to run our business. But, you know, for some of these companies, these levels of executive compensation are pretty obscene. You know, for one company, I ran some math. For one company, for every dollar they spent on electricity, they spent 91 cents on executive comp. How do you spend 91 cents for every dollar? If you add up your cost of revenue for that company plus their executive comp, for every dollar of Bitcoin mined, they spent $1.21. And that doesn't include other figures. You know, there are companies that spend more on SG&A than they earned in Bitcoin mining revenue. How does that make any sense, right? At Bitfarms, we're focused on performance, and we're builders and operators here. You know, it's not just about having efficient operations in terms of the direct cost to mine, but it also has to be across the entire business operation. And, you know, if we're spending more in SG&A than we're earning in mining revenue, that should be a massive red flag for everybody. You know, we're quite competitive on all of those areas. And, you know, honestly, our SG&A this quarter was higher than it was in previous quarters, but that's largely due to more one-off events, you know, associated with Riot proxy matter and, you know, former CEO lawsuit and these kind of legal expenses, which are not usual in most quarters.
And growing staff.
And growing staff to some extent, yeah.
Let's get the important thing out there. I mean, you've grown from 6.5 to 11.1 exahash just this 7 months of the year, so that would incur, you know, more cost in terms of running that.
Well, we've incurred more. We have hired more people, but you know, a lot of that upgrade came from the facility upgrades themselves, right? So, you know, when we're upgrading the facilities, and a lot of that hash rate growth has come from that, you know, that didn't incur any further, you know, employment costs. We didn't have to hire greater staff for that. The new staff is really focused on the new sites that we're building, primarily Paso Pe and Iguazu.
Yeah, no, absolutely. Just one final thing. You got this sales tax credit for, I think it's going back to like 2022. So like a refund, and you've had most of it already, and you're going to get some more of it. In fact, you might have already been paid more in the July period. I think there was about 5 million owed outside of the earnings period. So probably already received that already. But I noticed that, is that including your mining margin for that quarter or for the 6 months, how you were trying to calculate it? And would that be, I mean, is that something that's going to be a regular cost, a receipt, or is that like a one-off?
This was a one-off. So, I mean, what happened here is that back in, I think it was, maybe Bryce can confirm my numbers, I think it was February of 2022 when the Ontario trucker protest happened. And the situation is that the Canadian government froze bank accounts for people who were sending money to the protesters. The next day after that, they started using Bitcoin to send money to the protesters. And the day after that, Parliament dusted off a 4-year-old bill, which, was turned down in 2018, introduced it, made it retroactive, and said, you are no longer able to claim back your VAT that you spend on electricity. So for us in Quebec, Quebec has a VAT of, I think it's 14.975%. It's the highest in Canada. That effectively raised our electricity rates by 14.975%. Now, we put together a coalition. It was called the Fair Tax Coalition. We pulled together basically every miner in Canada into this coalition. And we successfully fought that. It took a while. It took about 2 years to get that through and to get, a victory there, but we were successful. And so that was basically a one-off in terms of all the tax that we'd already paid into the CRA in order to get that refunded back to us. Now, we still have to pay VAT, but it's refunded every 6 weeks approximately. So, that's a constant process of paying the VAT and getting it refunded, which is exactly the same situation that we had prior to the 2022 change in policy.
Yeah, we appreciate the context there and the more details about that. I do remember the trucker protest, Ben, and your dates and timelines are accurate there. Now, another update we wanted to get on the ATM front, you guys have been issuing shares about 117 million so far this year. Works out to about $263 million worth of funds raised since the 1st of January. Can you comment on the ATM process and how far along with your Bitmain purchases and that 21 exahash that'll get you guys, Ben?
Yeah, happy to. So in regards to our ATM facility, we initiated that in March. That's used solely to fund our growth initiatives and our fleet upgrade. We do not use the ATM to fund operating expenses. We pay for operating expenses out of our Bitcoin mining revenue. And then we, take a portion of our profit as well, and we've been applying that to CapEx and growth. As of right now, we have over $200 million in liquidity. That is way more than enough in order to pay for our remaining Bitmain contracts and our growth this year. So, we're fully funded on that, and we've actually been quite aggressive in slowing down the ATM program over the last couple of weeks. And so, that has, we just have not been aggressive on that ATM program. The market hasn't been as strong, and we don't need the cash as badly because we're now fully funded for our growth.
With regards to, this is a quick aside to that, obviously you're growing your HODL once you've paid your operational costs. I remember back to 2022 when you actually bought Bitcoin, and then obviously with the Bitcoin price dropping, you and a couple of other miners who did the same ended up selling it at sort of like a lower price than you initially paid for it. But we've seen one of your peer miners go out there and spend 100 million recently buying more Bitcoin, sort of like trying to use the micro strategy way of holding Bitcoin. Is it something you think Bitfarms would ever be tempted back into, or is it a case of we've done that, tried it, and actually,
I'm going to say
if that's the
very
case,
clearly, Anthony, no, we're not doing that.
If that's the case, then what's the benefit from hodling in your perspective? Because again, half the miners aren't hodling, and half of them are at the moment. So it's like it's quite a polarized view. I mean, we get Dan Roberts or Paul Prager on the podcast. They'll articulate in as good a way as Fred or Jason or maybe yourselves going to articulate now as regards to why you hodl.
I'm glad for the question, because we take a very different approach to our HODL than I think most of our comps. Like I said, we are not running our ATM program to fund OPEX so we can HODL every Bitcoin that we make. I think that was a very, very standard strategy that people implemented and operated in 2021 and through a good part of 2022. And what that meant was, sure, they were growing their HODL and, they were accruing the benefits of Bitcoin price rising. But when they never monetized that Bitcoin, it ended up that they lost all that value in the pullback, right? That's something that, most miners, including Bitfarms, did experience back in 2022. The way that we're looking at this is we're a Bitcoin miner. We have expenses running our Bitcoin mining business. They should come out of revenue, right? If we're not able to pay for a Bitcoin mining business out of revenue, we shouldn't be mining, right? So first and foremost, we pay for our operating expenses out of mining revenue. Then what we do is we say, how do we take the profits and how do we use them, right? And what we've been doing is we've been allocating some to CapEx, we've been allocating some to HODL, and then we've been allocating some to synthetic HODL. And the synthetic HODL program is quite unique to Bitfarms. I don't believe anybody else is doing something similar. What we're doing is we're taking a portion of the Bitcoins that we're selling, and we're buying back that upward exposure to Bitcoin prices with a long-dated call option. And so, you think about how this plays out fundamentally. Let's say we sell one Bitcoin. We spend 70% on running the business, mining operations, overhead, all that sort of stuff. We then take, 0.15 Bitcoin and we allocate it to maybe growth. Then we take 0.15 Bitcoin and you buy a long-dated call option. That long-dated call option has a strike price of 0.2 Bitcoins. So, if you look at it that way, we can almost fund our business, apply it to its growth, and achieve, the same level of upside with that long-dated call option. And it just becomes a really, really efficient vehicle for running our business and keeping that upside exposure. Now, there's always the possibility with call options, because they expire, that, that a call option could expire worthless. But in the situation that we are right now, expecting Bitcoin prices to improve, we're actually going to get a better return on our long-dated call option with Bitcoin than we would just by holding the Bitcoin. And we're still able to use that Bitcoin to fund our business. So we think this is a much more competitive strategy. It's incredibly capitally efficient. And this is a way that we can try and be a little bit more financially disciplined in our approach to what we do with the revenue out of our cash, out of our mining operations.
Yeah, that's a great explanation of the synthetic HODL. Just a quick follow-up there, Ben, before I ask about network difficulty and global hash rate. I just wanted to ask, you mentioned you're the first to be doing this synthetic HODL. Why do you think other miners aren't following suit?
It's hard for me to comment on why other miners do what they're doing. Just like network hash rate and Bitcoin price and hash price, those are things out of my control. All we can do as a miner is control what we can, and we can control our costs, we can control our financial strategies, we can control our investment strategies. And I'm not sure why anybody else hasn't pursued this, but for us, this is a very, very strategic way for us to shift our profile and provide asymmetric exposure to the upside while minimizing the downside.
Is it something you've brought in house, or is it, or using like a third party to deliver this synthetic?
So, we work with brokers, but we also have an internal team. So we have a risk committee. We have a VP here who's in charge of managing these positions and coming up with the strategies. We actually have a multitude of kind of trading strategies that are being tested out on a much, much smaller scale. A few $1,000s being allocated. We've got signals that we've developed internally that help us to better understand market trends and market actions, and help us to inform on those decisions. We're not just, looking at the chart and saying, Bitcoin's going to go up forever and we need to hold every Bitcoin that we mine. We are taking a data-driven, systematic approach to trying to understand the markets and trying to squeeze more value, out of our assets.
Yeah, it looks like this. You're using these sort of like hedging techniques, and there's a couple of other miners using hedging techniques. We know that miners using PPA agreements to hedge energy costs, but I suppose for probably quite a few miners out there that aren't using anything. They come into space as as Bitcoin mining, and now it's these intricacies and of how to sort of like deal with the day-to-day changes in sort of value of energy and value of Bitcoin price. And there are now like banks and other providers coming into the space to say, we can help you deliver this. But I think it looks like we're still at a very early stage. I mean, you guys have been successful for a few quarters now. It's not like it's been a long-term thing.
No, and we really haven't really ramped up the program very much, right? We've really taken baby steps with the program in order to make sure that we had the right controls in place, we had the right, systems in place, we had the right people in place. There's a lot of money to be made and there's a lot of money to be lost, if you approach a hedging strategy in the wrong way. And, we want to make sure that we're developing that capability because it is, fundamentally a strategic advantage if you're able to refine these capabilities and you're able to implement them successfully. And so far, we've done very, very well with our synthetic HODL program. We've done very, very well with a lot of these different strategies and signals that we're implementing, but it's still very much early days.
And Ben, where this gets me excited is the downside protection. Once you learn these strategies and risk mitigation and hedging on the way up, obviously that could be very critical and helpful when we do see that next bear cycle as well. So really interesting strategy there. Now you talk about hash price, global difficulty, a number of these key metrics that you don't have a lot of control over as an individual miner. With hash price dropping, global network difficulty going up, global hash rate going up, obviously there's a lot of real headwinds on the miners right now. How are you finding that from an operational standpoint? It's got to be fairly challenging right now for miners in this type of operating environment.
Yeah, I mean, as I said, we don't control hash price. What we control is hash cost. And hash cost, is really just a function of the energy efficiency of your fleet versus the price that you pay for your electricity. And what we've talked about this for years. I think the first time I talked about hash cost versus hash price was actually the day after the Luna fiasco happened back in middle of 2022. We had our AGM, and it just so happened that the Friday before we were at 30,000, and then the Monday that we're doing our AGM, we were at 20,000. And here we are talking about hash price and hash costs and sensitivities. And what we know is that we can kind of look at what the industry is running, what we think that they're paying for electricity. We can come up with ranges for where we think most people are operating at. And from there, we can determine what is going to be a range or kind of an area where hash rate and miners have to respond. And we think those sensitive areas are between 4 and 5 cents hash price. And so, you can track this when you look at how the difficulty adjustment cycle is moving and how the block speeds are progressing throughout the difficulty adjustment cycle. So on Friday, if you look at the anticipated difficulty adjustment cycle change, it was about -1 to -1.2. It was a very tight spread, nearly halfway through the cycle. And as of this morning, it was like -4.5 to -5.5. And what that means, when you have such a massive delta in the expected change, not only in the gap between the two expected figures, but also a massive change from a -1 to a -4 and -5, means that you need to have that much more hash rate coming offline to drive the blocks to be that much slower to introduce that -5% adjustment cycle, because you're already halfway through the adjustment cycle, right? So you don't just pull off 5% to get a -5% adjustment halfway through the cycle. You're pulling off 10, 12, maybe even 15%, because that -5% adjustment is happening in such a short period of time with so few blocks left to go. And so right at those levels that we thought, would be kind of like the lower bounds for miners, we saw a massive and almost instantaneous reaction when it came to block processing times and hash rate. And it was really much in line with the areas that we thought the network would respond to. What we do about that is we control our hash cost. And we have been improving our energy efficiency at such a rapid rate. We've gone down from 35 watts per terahash down to 31, now 25. And so we exited Q2 with a 4.3 cent average price per power and a 25 watts per terahash average across our fleet. That translates out to a 2.7 cents hash cost. So even when we were at our all-time lows, all of our mining operations, were still cash flow positive on a direct margin. And that's because we positioned ourselves to be so cost effective and so efficient in terms of our operations. When you look at what we're doing throughout the rest of the year, we still have nearly a 20% improvement in the energy efficiency that we're going to drive from 25 watts per terahash down to 21 watts per terahash. So that hash price number is still going to be trending lower throughout the remainder of the year as we continue forward with our fleet upgrade program and our new constructions. And we believe that level is so much lower than the levels that the market is going to respond to, that we've largely insulated ourselves from these events. That said, nobody is here for 4-cent hash price, right? Nobody is buying Bitcoin miners because we're at 4-cent hash price right now, and they think it's going to go down to 3-cent hash price, and you're going to have such a stellar margin at 2.7. No, right? Nobody buys a Bitcoin miner stock, and nobody buys a Bitcoin miner because they think that mining economics are go down. When you buy them for it, is because you think that they are going to grow so much faster than the expected rise in Bitcoin price. And what we see now is what I see when you look at the past historical trends is that every halving epoch cycle for the last 3 halvings has gone up between 300 and 400% from the first month you leave halving to the top of that bull market cycle. Now, it usually takes several months before you get that massive ramp up, but because there is a depressed period of economic incentives, that creates a massive lag between people buying new miners, plugging in new miners, and being able to capture those rewards, which is also what's driving those mining economics forward. So we are positioning ourselves in advance of the cycle that we anticipate to be coming. And when we have those fixed operating costs at 2.7 or 2.5 or 2.4, or wherever they end up at the end of the year, as hash price goes up, we're going to be having fast, quickly expanding mining margins going from 4 cents to 6 cents to 8 cents, 10, 12, whatever it may be. Historically, it's gone up 300, 400%, which would mean somewhere between 15 and 20 cents hash price. Do I think that can happen this time? I don't know, but we are getting ready for that trend. And there are a few things that are happening right now, which is particularly interesting with all the amount of infrastructure, which is now being reallocated or looking at being reallocated towards HPC AI, because that means that there's that fewer megawatts to use for Bitcoin mining. That means there's that many less rack slots in order to allocate towards mining, which means that the ability to grow that network hash rate in line with Bitcoin price may be compressed by the massive economic incentive that HPC and AI is bringing. And so you're going to see two compute markets which are competing against each other for what has always been the #1 bottleneck for growth: megawatts. It's never been the miners, with the one exception of 2021 when we had the silicon shortage. It's always the megawatts. And with the huge demands for HPC and AI and the economic incentives associated with that, we could be in for a very, very attractive Bitcoin bull run here for mining economics.
Thanks, Ben. That's a good explanation. Moving across to the HPC AI land space, we've seen another big update this week from Core Scientific and their contract with the CoreWeave, showing real signs of changing the current conversation, I'll say, in the Bitcoin mining industry. Is this something that you're looking into now? I mean, in previous updates, it's been more a case of looking at the pure play miners, with the likes of Riot, CleanSpark, Marathon. But surely this type of news is, you've got to keep your options open. And if you were to sort of move into that space, what sort of timelines would it take to determine a solution for a potential hyperscaler in the market coming to Bitfarms and say, we'd like to utilize some of your power?
Yeah, so when we're portfolio managers, and our greatest asset are the energy contracts that we have in our portfolio. Now, what we do as portfolio managers is we're constantly reevaluating how do we get the most value and utility out of all these different assets in our portfolio? And what we see is we do see a lot of great potential for HPC and AI in that energy portfolio. When you look at the kind of revenues that people are seeing in the market for deals, you're looking at, I think, recent deals between $140 to $210 per megawatt hour, or 14 cents to 21 cents per kilowatt hour. You know, that is quite high revenue. When you look at what T21s were doing on August 7th, they were doing, you know, $80 a megawatt hour plus or minus. Now, obviously, those revenues are a lot higher with HPC and AI, and they're stable and not correlated to Bitcoin mining. So it provides a really, really attractive profile. But we still believe that looking at the Bitcoin bull run and looking at that exact same trend that I was just talking about with hash price, there is a much better return on invested capital over the next, say, 12, 15, maybe 18 months on Bitcoin miners. Because as hash price increases, the value of those megawatts are also going to increase. So for example, we were at 4 cents hash price when we got, you know, roughly $80 a megawatt hour. If we go up to 8 cents hash price, it would be equivalent to $155 a megawatt hour. If we go up to 12 cents, it would be equivalent to $230 a megawatt hour. If we go up to 16 cents, it would be equivalent to $310 a megawatt hour. And this is all vastly expanding margins. And when you look at the relative capex that's required for, let's say, a megawatt of Bitcoin mining versus a megawatt of HPC and AI, they're vastly different. For the, you know, the growth that we're doing this year with T21s, 1 megawatt is equivalent to about $1 million. When you look at just the infrastructure side on HPC and AI, you're seeing really, really different numbers out there for the qualities and the kinds of data centers that people are building. But if you're building a high quality tier 2, tier 3 data center, easy $10 million a megawatt. If you throw in the GPUs on top of that, it could be $30 to $40 million, right? And so we still believe that Bitcoin mining, especially in the short term and the medium term, is going to provide a better return on invested capital. But that doesn't mean there's not a room in the portfolio for HPC and AI. And I think when you look at where we expect historical cycles to kind of play out again, it's towards the end of 2025 and towards the beginning of 2026, when we should be towards the top of the Bitcoin bull market and start to experiencing, you know, a pullback. That's when we want the diversification. And so the timeline that we're looking at for HPC and AI is not now, it's not immediate, but it's a very realistic timeline that aligns with historical market trends so that we get that diversification at the top of the Bitcoin bull market cycle when you want it, and not before the Bitcoin bull market cycle when we're going to miss out on such a tremendous opportunity to generate a much higher return on our invested capital.
Yeah, it's so interesting, Ben, listening to you talk about these market cycles with Bitcoin, because you've been in so many of them yourself, starting back.
Too many.
Yeah, too many. You know the volatility, you know the ups and downs and the timing. So it's always great to pick up those nuggets of information. Hey, now I'm not sure how much you're able or willing to share about the Riot situation, but we did want to close out there, Ben. We're just about at the hour. We wanted to see if you're able to provide any updates to viewers here on timelines and kind of next steps as that process continues to play out.
Yeah, you know, I can't provide, you know, any real detail that hasn't already been provided. I mean, what's happening now is there's been a special meeting of shareholders that's been arranged for October, and they've got a record date towards the end of September. That meeting is specifically about assigning or voting on board directors. So Riot is moving to nominate 3 board directors to Bitfarms board, and that will move to a shareholder vote, you know, in the next 2 months. There's nothing on the table other than that right now. And there is going to be a process there that unfolds over the next couple of months. Other than that, I can't really say much. But, you know, the one thing maybe I would say is that we understand why Riot's interested in this. You know, we continue to believe that we are undervalued. We continue to believe that we have the best, you know, potential for investors to get exposure to rising Bitcoin prices. through our fleet upgrade program and through our quickly expanding market share and a quickly rising energy efficiency. So we understand why they would want to buy us. It's underwriting the same thesis that, you know, we've had for the entire year, that we're undervalued and we represent the best investment opportunity for investors. And one of our biggest comps in the space apparently agrees.
Yeah, I definitely would take it as a vote of confidence. We've talked to Riot and Jason about this interest, and they have nothing but high things to say about the operations, the team at Bitfarms. So I would take that as a vote of confidence, Ben. We'll pass it back to you for any closing thoughts here. We really appreciate the time, spending the hour with us, walking through the earnings, the strategy, the outlook for Bitfarms moving forward. You've come so far just in this first month in the leadership role there, Ben. We're excited to see where you take it in the next few quarters here, but I'll pass it back to you for closing thoughts. And thanks again for your time.
Yeah, thanks, Bryce. You know, closing thoughts is, you know, we have such a tremendous team here and tremendous set of opportunities ahead of Bitfarms. You know, now that we're past the CEO transition and we have me in the seat, you know, everybody is really, really excited and moving forward. You know, I think the first month has been incredibly exciting and we've been doing a lot of things. A lot of that you haven't heard about yet. But, you know, over the coming months, we expect to give a lot more news. And there's a lot going on behind the scenes that, you know, investors should stay tuned for, because, you know, we're not stopping at 21 exahash. We are going to continue growing far beyond that. We think our opportunities to do that and continue to strategically grow and deploy capital are second to none. And, you know, investors can look forward to receiving updates on that over the coming months, you know, as we start announcing more details around the strategic plan that I'm implementing. So it's very exciting times here at Bitfarms. We're all energized, we're all pumped. And, you know, as always, I will say best of luck to the longs, and to the shorts, get ready to cover.
A final farewell warning. I love the comment you made. There's so much energy in the air. You could mine a block with it, Ben. That's phenomenal.
It's true.
I'm glad to hear things are going so well for you and the team at Bitfarms. We look forward to continuing with these updates throughout the year. Anthony, I'll kick it back to you if you have any closing thoughts. But Ben, thanks again for your time. You guys, if you're still watching, feel free to subscribe, hit the like button. Let us know if you have any additional comments or questions we weren't able to get to. And we appreciate the view today.
Yeah, no, great to have a chat today, Ben. I mean, we've probably missed about 3 or 4 questions. We could have been here another hour, to be honest with you. But thank you for your time today. Look forward to getting more updates as and when they come out. And yeah, keep flying the flag for Bitfarms. Good update. Thank you.
Thank you, guys.